Your QuickBooks to Xero migration is not a file transfer. It's a data transformation between two platforms with completely different structural logic, different account frameworks, and different assumptions about how transactions are recorded. Miss this, and your go-live becomes a disaster. Here's where the real risks hide. Migration risks that actually matter. QuickBooks Desktop to Xero. QuickBooks uses hierarchical accounts with sub-accounts nested underneath. Xero uses a flat structure with account codes. Tax engines work differently. Job costing works differently. The firms that hit go live without surprises understood these differences before the conversion started, not after. Here's what to watch for. Risk number 1. The structural mismatch. QuickBooks Desktop uses parent accounts with sub-accounts. Xero uses a flat chart with account codes. When you move data between them, every sub-account needs a deliberate mapping decision. There is no automatic answer. A sub-account tracking project costs in QuickBooks has to land somewhere logical in Xero's flat framework. If that decision is made carelessly, transactions post to the wrong account from day one. Risk number 2. Tax code differences. QuickBooks Desktop applies sales tax through a separate tax engine. Xero applies tax codes at the line item level with different default rules. Moving between systems without explicitly validating tax code defaults means every transaction entered after go-live may carry the wrong tax treatment. That error accumulates quickly and is extremely time-consuming to unwind. Risk number 3. Pre-existing source file errors. Here's what most people get wrong. Migration errors usually aren't from the conversion. They were already in the QuickBooks file. Consider a firm with 9 years of history where a bookkeeper repurposed a holding account 3 years ago without renaming it. In QuickBooks, it was invisible. In Xero, the historical balance creates an unexplained line on the balance sheet. The issue doesn't come from the conversion. It surfaces because of it. Risk number 4. Account mapping without human review. Automation handles the volume of migration well, but it cannot reliably make judgment calls about accounts that were repurposed, renamed inconsistently, or built around QuickBooks-specific workflows with no Xero equivalent. When those are left on default mapping, the profit and loss and balance sheet can be quietly wrong for weeks before anyone notices. Risk number 5. Payroll data does not transfer. This is not a gap in any specific service. It applies across all conversions. Historical payroll reports need to be exported separately from QuickBooks and stored before go-live. The source file should remain accessible in read-only mode for at least 90 days, because payroll and prior year queries will come up. Risk number 6, and the solution. The WOW book switch process is 98% automated. Account structure conversion, open transaction migration, and tax code mapping. The remaining steps are deliberate human review. Trained accountants compare the trial balance, balance sheet, and profit and loss against QuickBooks source data before the file is released. Any discrepancy gets corrected before go-live, not after. Go-live day becomes a confirmation exercise, not a discovery session. Finished before lunch. Go-live should be a confirmation, not a discovery session. 98% automated conversion with human validation of trial balance, balance sheet, and P&L before you see the file. The first thing your client sees in Xero is correct. WOW book switch. Link in the description. Submit your QuickBooks file today.